Okay, I'm just going to carry on here with some training for those of you that have just made an investment into some of our indicators. Most of you made an investment into the measured move indicator because of what we showed in the Ninja webinar, but I want to draw your attention to a few of the things while I've got this opportunity to reach you and maybe pass on some things that, again, that were passed on to me that are just so important. And this is one that I think it's, if you're new to trading or still learning, still developing in your trading career, these are things that are absolutely essential to know. And if no one has shown this to you, well, perhaps I can be that person, because again, as I mentioned in the webinar, everything that I taught you guys was all taught to me. So this is the kind of thing I wish I had known early on in my career. Fortunately, I had the good fortune of working with some really successful people who taught me all of these things. Right? So I'm just kind of paying it forward there. Now, all right. So yes, we do sell this indicator. So right. So full disclosure. Yeah, but you don't have to get it from us. I'm just telling you. Oh shit, you can do it yourself, right? You can draw these lines yourself. It's kind of a pain in the ass, right? I mean, we don't charge that much for this thing. But let me show you whether or not you think, if you don't have this, whether you think it pays for itself. Now, we make this distinction here with our initial balance indicator between the opening range and the initial balance. And there is a distinct difference between the two. And now some will tell you that it doesn't matter, but I would tell you it very much matters. So the opening range is the first 30 minutes of trading. The initial balance is the first 60 minutes of trading, and the distinction between those two is important. The main reason being because algorithms use them. So I think I've said this before. Certainly I've said it in the initial balance video that's on our site. But again, if no one has shown you how important it is, you might say, whatever it is, I don't want to buy all this stuff. Again, bear with me here. I'm just going to go through the last 5 days of trading in the YM. I'm just going to use the YM because it's probably something you guys are all trading. It's very technical. It's less expensive to trade than the ES. So you can trade multiple contracts more easily depending on what your account size is. So I just want to go over this really quickly here. So here's Friday. So I think I've got 30 days up, but we're just going to look at this last week of trading. So again, I'm recording this on August 22nd, and we're just going to look at the last 5 days. Right? So it's all current. Nothing's been cherry picked. I'm just using this past week. Okay, so in our color coding here, you see here there's this kind of an orange section here, and that's the opening range. So here's the regular session open here, right here. Then we had a little tick down that puts in our IB low, right? So we're making that distinction between here's the opening range high. So the first 30 minutes of trading is I'm on a 2-minute here in the YM. In that first 30 minutes, and then we get, so here here's our IB high. So this is the low, and we're getting to 10. Well, where's 1030? Here's 1030 right here. I'm right 1030 here, so you can see the pivot high and the pivot low in that first half an hour, and then throughout the remainder of the day, it's important. So what I want you to see here is the IB first test failure. Right now, maybe you know this trade, maybe you don't. If you don't, I think you'd be glad someone's going to show it to you. So here's the phenomenon. The first test, emphasis, first test of the IB high or low, depending on which direction the market is going, has a 90% failure rate. Now, pause for a second. 90%. Right, so that would be one of the most high probability trades you can take. Would it not? All right, let me prove that. I see you say, okay, well, it's easy for you to say. Why don't you prove that to me? Okay, well, we'll start with Friday and we'll work back. Okay, so here, by the time we get to this test here, right, my logo. So this is at 11:10. So the IB has been set 9:30 to 10:30. This is the first test of it. Right, it goes right up here. It can't even get to test that tick. So first test here, it fails by 2 ticks, rolls over. Where do we head? IB mid. Right, now it goes back. Now most common place for that to go on a failure, I'm going to get rid of that. Yeah. Most common from a failure at the IB is to head back to VWAP. Now here it doesn't get there. It stalls at the IB mid. One more reason why you want to have these levels, so you don't want to ignore the IB mid. We come back to the IB mid. Now we go back. Now at this point, this is no longer the first test. It fails, but that's not the first test. That does not have that same probability event tied to it. It fails, but then it gets up, right? We come back, it's going to test the open, and now once we're through, and we stay to the close. Right, very common for the end of the day ramp right here in these circumstances in the market. So you get the end of the day ramp. Once they test, once they get through, they never look back. Right, but the first test. So you look at that and you say, first test failure. What did that produce? I'm just using our little toolbar here. So that isn't exactly a $395 swing down to the IB mid. All right, test, short it, $395. Okay, now you say, okay, well, I never tested the IB low. One thing just to draw your attention to, you have the option to put up the statistics. So I have the last 22 trading days here. So you can see that the IB has broken 95.45% of the time. The low broken only 40.9%, the high broken 72.73%, and the average break here 90% of the IB on the high, on the low. On the high, the average break has been 68.44%. Right, so very high percentage broken. We've got incredible volatility in the market, so that's not surprising to me. But you can keep track of those, and you kind of want to, looking back. Now, normally I wouldn't have 30 days of data here to give me 22 trading days, but I just wanted you to see that that's a feature. And if that's annoying to you, like it's taking up space on my chart, you can just come back here and you have show statistics. I can take that off if I want to. Right now it's off. So I know the stats, so I don't keep it up there, but got measured move on there in the background. Okay, so that's Friday. There's your 395 off of the first failure, right? I'm pretty sure our indicator is less than that. I don't remember what we sell it for, but it's a lot less than that. Okay, here let's go to Thursday. Okay, Thursday. All right, so the time we get right here. Oh, here's my crosshair. All right, so here's the IB. There's 1022. By the time I get right here, there's the IB is set. So there's my first 60 minutes of trading. Right, so up here can't get there, fail. Now here we get it gets a push through, but that's the failure. So there's at 1052, it's trying to get through, 90% failure rate, back down here. Right, now this again, it looks like it runs into some of this structure here. It could be volume, but it be some other things there. Looks like there's a measured move there actually. Take this just out of curiosity here. It looks like we got one here, right there. Right, so you can see it from this pivot. Not to digress in this, we've done enough on this. Golden zone, target to the tick. Right? Okay, I digress. Oh God, this thing's kind of a pain. All right, let's get back here. All right, so from this failure rate to swing back down here where it runs into a golden zone, what do we got there? All right, so from coming back inside, there's another 335. Right, from that swing down here to 335. Now that's where, right, we're starting to combine things here. If I know, here it would be a 50. Pardon me, I grabbed the wrong one. If I know from that little pivot that's hanging there that there's a golden zone here, and I've taken this, right? I've taken the short here. Well, I don't want to stick around as I run into that golden zone, right? You see what happens, goes right to the tick, right? So that would be a reasonable place. Well, shit, this wouldn't have been bad to get out at the 50. So even if you took it from the break down to the 50, you had another 260 there per contract. Like take it to golden zone, 395. Well, let's go back Wednesday. All right, now Wednesday, well, let me get that off here. Wednesday, I think, is the one day where you would have had a loser. Right, so note here on Wednesday, here's our initial balance. We get set. Now, it's not until, at this point, it's like 2:30 in the afternoon. It's late in the day to be testing. But there's your first test of the IB low right there. It's at 2:15 in the afternoon. So, you would call this a failure because we don't trend down and we go back inside, but that's far enough to where you'd have taken, likely, right, unless you're trading with very wide stops, right, you will have taken your stop. So on it entering back in, if we just use the absolute low, well, there's 195. You likely, that's 35 ticks. Unless you're trading micros, likely if you're trading full size, you probably took a stop there, right? So there's your loser day. All right, it would be. I wouldn't want to show you, every day winner, because there are days where you will get stopped out on that trade. Now, note here what it does after it breaks. It doesn't carry on. We don't get a trend day. What does it do? Right back to VWAP, right, and then you get the trend. All right, so this is a late afternoon sell-off, right? It's usually news driven. Something's happened, right? So there's that's the sell-off that comes from. But note what I want you to see, right? As I said when I started, the three most important levels on the chart every day: IB high, IB low, and VWAP. All right, we come back to VWAP. Now you get your monster move, and we go 100% of the IB. We actually get through that. All right, that's Wednesday. So potentially, there's your loser. Okay, now here Tuesday. All right, so here's 10, but by the time I get here, here's this. Well, let me open this up. All right, so this bar right here, this red bar right here, that's hitting at exactly 1030. So that sets the IB low. Next bar breaks it. Right, that's the first test of the IB low here. What do? Right, from that test, straight to VWAP. Right, so it's almost every day. Oh, you can count on it. Right, if you're not tracking this, I hope by the time we're done here you will be. All right, so what does it pull there? Right, so once we get back in to VWAP, that's what do I got there? $675. Right, one contract, $675, straight line to VWAP. Doesn't even look like there's any measured moves in there. Just straight to, well, there's probably a measured move from the, shit, if I put them on there. I guess not. No, but I don't want to digress into that. So from the pivot here, right to VWAP, $685. All right, so we've had one, let's call it a $200 loser, right, to be just to give it maximum room over here. So you had a $200 loser. Everything else has been $300 to $600 winner. That's Tuesday. Right, how about Monday? All right, Monday, let's get our. All right, so the time we're sitting here, that's 10:20. So note here, so at 10:20, that's the IB low gets set, but from the IB, what do? Right to VWAP. Right, now that you're not set until you get to right here. Now this is 10:30 right here. So we've had this straight shot down, retrace right to VWAP. Now, if you can get the VWAP retrace in conjunction with a measured move, well, again, that's a trade you want to pay attention to, right? So right here, they could have used the first one here. Right, so there you go. All right, so here's the IB low, back to VWAP. Now, so when you see something like this, and it's an internal, so this is the concept we talked about, right? Internal retracement. You see that with the ambition for that to go external, right? So we'll look and see if it got there. Yeah, shit, I can't remember. It actually doesn't get there. But you got a golden zone there at VWAP after this. That's a trade you want to take. All right, now, there's some other things we'll look at here that will help you there. But note here, so we don't actually get out of the IB all day long. So it frames the market perfectly. This is a trendless day, right? So looking at the stats we were just looking at, this is an unusual day given the volatility that we've had lately. Very high volatility. So it's unusual to have a day that doesn't get out of the initial balance, but it's commonly you'll find that on a Monday or a Friday where we're trendless. But Tuesday, Wednesday, Thursday, those are your trending days. And just out of curiosity, right, if you stay with that, ultimately you can see what happens right here. So from here, golden zone, you would have had to hold it, right? And it goes back to golden zone. There we get our target right there. Right, it takes a while to get there, and like if you're a day trader, you wouldn't have stayed with that. But that's kind of part and parcel of what I was talking about in the measured move indicator. Would you have remembered that, right? That it was there, right? The indicator won't let you forget that that's there from a prior pivot high to that. Right, I mean, I could just keep going. Here's first test, fails. Now it gets through, right? Comes back right to VWAP. Here, opening range. All right, so this one, that's probably tail end of the week. Here's a nice one, right? Well, let's see. What time of the day is that? That is at 11:06, so the IB is set. So I could do these all week, right? But I promise you'll come out with more winners than losers and way, way, way ahead. So here's the first push. What does it do? All right, from the failure right to VWAP. Right. Now down here, this is the first test of the IB low of the day. So let's just do the math, right? What does it look like here? From that failure to VWAP, $415. Right, first test, 90% failure rate. Why would you not? Now again, if you're trading the YM or the ES and you get high tick there, right? You're over 400 on the tick. That's a must-take trade, right? Put a stop on it, of course, but your target is VWAP. Right, now down here. Right, so we hit this. That first little test here is at 1:20 in the afternoon, right? So it tries to get through. Now, if you see that kind of thing happening in the day, you see these wicks that are down here getting rejected, right? That time to get on board, right? It goes all the way to the IB high. But the first little move to VWAP, which is more commonly what you'd be looking for, right? First move to VWAP. There's 200 to VWAP, right? It barely pauses there, all the way to the IB high, 131 ticks, 655. So this one. So just using this phenomena on this day, right? So you have this one takes you to VWAP. There's 400 per contract, right? And this is YM, IB 400 contract. Then here, if I just took the failure here to VWAP, there's another 230, right? So that's just those two trades, nothing else, no measured move, nothing, just this phenomenon of the failure of the IB high or low, first test, right? About $750 a day. I could keep going. Right, but I think you guys get my point. Here's your loser, right? Here's a loser. You're going to get stopped out occasionally. You will get stopped out, right? Here's a little winner, right? So if you're a scalper, right? I mean, what'd you get there? Again, it's deceptive, right? That's more than you think. That's 170 per contract, right? But you see that one right there. Likely that'd been a scratch, right? Because you're after VWAP. You know, you're hoping that gets to VWAP. So if you wouldn't necessarily, maybe if you're a scalper, maybe you took a couple. If you're taking 2 or 3 lot, maybe you take a few out there, and you've got a runner that's trying to get to VWAP, but doesn't get there. So if you were just in a single contract, likely it's a scratch, right? Because it come back and take out your stop. So you're there. It starts to get away. You get 175 ahead. I'd like to think you moved your stop to break even. Right, now it kicks you out here, right? So this would probably be a scratch. Little scalper, if you're after in the S&P, you do this, or you're after 2 or 3 ticks, you leave a runner. Very high probability trade. Okay, that's all I wanted to head here. Now I'm going to come back here. I definitely want to talk about Renko bars. Okay, so I'm gonna my stop. There it is.